Hello and welcome to my latest video. This is marketmonkpicks from Twitter, and I wanted to post another video to follow up on something that I talked about yesterday. And apologies if I'm I feel like I'm looking a little ragged in these last couple videos, and it's the end of the semester for me, so I had a couple marathons of grading, but yeah, part of the reason I'm really getting back into this, I'm very excited for the summer, the extra time I'll have for trading and for education, and that's really what I'm devoted to as part of this venture is sharing what I've learned. And I wanted to talk today about a really important aspect of um, my approach to trading and how I look at the market. So yesterday, when I was going through the live flow alerts feature, I talked a bit about how their rules organized stocks by market cap. So small cap, mid cap, large cap. And I just want to kind of break that down simply and define what that is, and more importantly, why it's relevant. I think for you as a trader to take market cap into account. So market capitalization, right here on Investopedia, it refers to the total dollar market value of a company's outstanding shares of a stock, commonly referred to as market cap. It's calculated by multiplying the total number of a company's shares by the current market price of one share. So, a company with 10 million shares selling for $100 each would have a market cap of 1 billion. Investment community uses this to determine a company's size as opposed to sales or total asset figures. In an acquisition, the market cap is used to determine whether a takeover candidate represents a good value or not to the acquirer. Okay, so and how they organize it typically: large cap, 10 billion or more; mid cap, 2 billion to 10 billion; small cap, 300 million to 2 billion. And so a lot of the resources on Unusual Whales are organized in this way by um, by market cap. And if you're ever curious about a company's market cap, you can also, like, if you were to use TradingView, um, this will tell you really any decent chart software is going to give you this information. So we can see here that the market cap 34.28 billion, and that would be defined as a large cap. Now, we in the market today have some companies that just completely blow this out of the water. Apple, 2.38 trillion. Um, Microsoft, obviously, is going to be up there too. So these go into a larger category, often called mega caps. In Unusual Whales, I go to the options dashboard here. Those are just defined as big. So they on their site have it organized where small caps are 300 million to 2 billion, mid 2 to 10, large 10 to 50, and then big 50 billion plus. Okay, so why does this matter? I mean, you can trade options on a stock in any one of these categories, but not every stock within that category is going to be really tradable for options. And so I want to break down how I determine that. But before I do, I think for me the most valuable aspect to this market cap structure is that I can scroll through stocks of these different sizes, and things are going to jump out to me. So if I were to just go to technology, all caps, okay, what am I going to see every single day? I'm going to see Apple. I'm going to see Nvidia, and I might see one or two others. Palantir popping up here. is interesting. It's in a uh, kind of interesting, to use the term interesting again. It's in a kind of a weird spot. It went up 13%, and that's the first sign of life it's really had in a while. It flushed on earnings again. We can see where it's come from. Back when it was kind of at maximum hype last year, if you recall all that, and then it's just completely cratered since then. In fact, if you can look up a tweet of mine where the two companies I was really bullish on long term at the start of the year were Palantir, wrong, and Oxy, where I was right. And I got rid of Palantir pretty quickly, and I kept Oxy. So stick with your winners and cut the losers. But Palantir isn't in a spot where I think it is potentially interesting again. But in any case, so when you have it to all caps, my point is that you're just going to see these stocks. Now, you could make a living just trading Apple or just trading Nvidia every day and only trading that, and that works perfectly fine as an approach. If you're trying to really dig in and find some other stocks and other opportunities, when you start scrolling through these various market cap sizes, you start to notice stocks you might otherwise not have seen, and there might be some opportunities there. And so this options dashboard is a starting point for me, especially after hours. So during the day, I mentioned last time how live flow alerts is my kind of my go-to tab, where I just go through and watch these chains coming in according to the rules they've set up here, and I then follow up on that in the more comprehensive view of flow, or in the intraday analyst, which I'll talk about in a separate video. But when I'm just sitting here on the weekend, or after hours, or I'm going through my live stream, this dashboard is a really valuable tool. So I go back to technology, and I'll start with the small caps. And okay, so I see here you have Riot is obviously a crypto stock. It's going to be crypto dependent. It pops up a couple times here. If I look on the bearish chains, you never want to ignore those. And one thing I like to see is for a stock to show up more on the bullish side than the bearish side. That's just if I'm bullish on it. I do always try to account for downside scenarios. You've pretty much had to do that for crypto stocks, especially lately. But okay, so I see Riot here. This these are weeklies, so again, that's not entirely going to be very useful for me. So I might move on from that. We got MMAT here, 520, and that's a stock that I've traded a couple times. I traded it like a lot of people back when it was Torch. But again, like many stocks on Friday, it kind of finally showed some signs of life, and so that might be something that I want to keep an eye on. See if it can get back into this channel here, where it to like 220, whatever, 150 to 220, something like that. That's a pretty good swing trade. And then once that broke down, you're kind of looking for it to get back into that channel, and then you see if it can push higher from that. So a $2 call on a stock that's trading at 142, that's a bullish chain. That is interesting. That's one I might take note of. Okay, so getting into a sector that's kind of my favorite, one of my favorites, basic materials. And again, if you just go to all caps, you're going to miss out on some of the smaller ones. You have a lot of FCX sold puts here, and this is a sector that finally started to recover a bit late last week. It's been really beaten down. So FCX looks a little bit mixed here. I might jump into the flow and see, kind of where it sits. I'm not getting much of a kind of definitive direction just out of this. But as I go into small caps, one that I have been on for a while now is AMRS, and it has some interesting activity here. The highest volume is on these in the money sold puts, which essentially is a way to control some shares on the stock without having to buy the shares and put out as much capital. So it's a very bullish bet that they're making. I might dig into it and see if this is part of a multi-leg strategy or something like that. So I can actually, well, I won't do that right now. But anyway, so AMRS. Okay, so it pops up here. Now, one of the things that you have to keep in mind for small caps when you're trading options is, what do these chains look like? What is the spread on these? And is it going to be difficult for me to enter and exit at the levels that I want to? Now, obviously, when you get a massive move on AMRS like you did on Friday of 37%, but the bid ask spread and all that doesn't really matter. I mean, it's going to go up. The option contracts, I think 522C went up 600% or something like that. But in general, if we look at how it sits now for 520, if you wanted to try to enter this, like if you're bullish that this is going to continue, you have a bid ask spread of the bid is 35 and the ask is 50. And you have to bid on this in $5 increments. This isn't like Apple where the bid ask spread is so small, you essentially can just get in and out with market orders, and or it's $10 is the difference. So you want the best price that you can, but there's enough volume that you can get in and out. When you trade something like AMRS with options, it's very easy to get yourself in a bad spot. So like if you wanted to go out of the money, and I might not go 250 with only a week left, but we'll go, yeah, okay. So 250C, you can put in a bid at 20, and it might not get filled. You put in a bid at 25, and it'll get filled, and you'll be instantly red. If you because it'll be trading at 22, but you can't bid that exact price because you're stuck with these $5 increments, and that is a consideration when trading options on something like this. So how would I approach that? Well, I was very bullish on AMRS. I put it out on our Discord and talked about it in my live stream, and have been on that on that stock for a while. So I just would typically go further out, and at that point, it doesn't really matter quite as much. You can be really picky about the spot that you get, and you have the time for it just to work out. So I see a spread here of 40 to 75. Some people will just completely stay away from that. I might go for it, and basically would look to just bid, I'd bid $50 or $55 and just see if I can get a fill, not being in a big hurry on it, and just kind of go from there. So this is something that you have to really consider with these smaller caps, and a lot of them are kind of better for shares. So here, Cenex 617 14C, and what is Cenex? Let's look. Aluminum. Okay. So aluminum's been getting crushed, and you saw this with AA as well. So this is a definite dip buy. This chart actually looks like it's in a pretty good spot. RSI is very oversold on the day charts. It's kind of coming out of this zone here. It had this support back in December where it had a few bounces, traded in this zone before that. And yeah, and so the line, has some significance down here. Okay, so that is 14 out of the money. Let's just see what the activity is on it. And so this is a good example of something. You have stocks that some of them only offer monthly options, and this is something that you want to consider. I mean, especially if you find yourself kind of caught between dates. If you were to buy 520, you're playing a weekly. If you wanted to be a little safer with it, I would go out to 617, and the price is fairly reasonable on that. And here you go, as you can see, you had a big spike in demand for this contract at 1023 volume, higher than kind of everything else that's going on. And it looks like you could try to get this for $100, and just put in your bid there. You could lowball it, try to get it at 95, and that's the thing. You have time. You got to know. You have to know what kind of trade you're in. This isn't a scalp of SPY where you're just jumping in and out with market orders. You're trying to be strategic, get it for the best price that you can. If it's a swing, you might be prepared to scale in. So your this dashboard helps you to avoid just being random in the strikes that you buy. So this is out of the money, but it's not so far out of the money that it is especially risky. There's always risk, but a move to $14, and you can see there was some activity at 13 as well. But a move to $14 is not really that much, and in fact, you could move well past that as we close out May and get into June. And if you have that June 17 contract, then you have some time to capture that move. And my approach to a stock like that probably would be, I'd be in a position of about 80% shares, 20% options. And so, I'd have whatever, $300 in options on it. And I probably wouldn't buy them all at once. I would look for this, kind of a slow grind. It's sometimes you do get these big, huge spikes when something's this beaten down, like AMRS had. But that would be my approach there. And back to market cap, if I had not taken the time to just scroll through the small caps in basic materials, I would not have seen this, and may have not had that opportunity. So these are kinds of stocks I like to trade. I like the fast moving tech weeklies and the volatility, and or trading beyond meat and all stuff like that. The quick money, I like that. your risk is high, so you want to kind of go smaller. But if you want to build your account, I think having a broad range of approaches helps. And these are the kind of stocks you can find by doing this. So if we go into the mid cap I like a lot in basic materials is X. X is one that you can trade. You can trade weekly options on. You also could go a little further further out, and you can see that the options are fairly cheap on it, so you can get a lot of contracts. I usually just go in the money or one spot out of the money. If I'm on a weekly, if I go to the next week, I might bump that up a few spots. But I'm looking for contracts around that $100 level. So what is a trade on X, a mid cap? How does that what does that look like in terms of the movement of the contract? So okay, so we'll go to options profit calculator, put in X. So let's say that I buy 2450C, and let's just say I buy 5 of those. So $430 investment. Okay. So I do this as a day trade, and I enter into it and get into like a 3-minute chart here. And we can see it spiked a lot pre-market, and then started to give it back a bit into close. Some of the basic material stocks did that. End of the day, 0.74. Nothing too extraordinary or remarkable there. But here, okay, so it opened at 24.93, went up to 25.31. Like, let's say it retests that, gets back into that 25. If it were to approach $25, you can see that my trade I'd get 38% on that. So that would be good. And I'd probably scale out, well before that. So to get to a 20% on this trade, you only need to move to between 24.7, like 24.72 or something like that. And I have 5 of these. Maybe I'd get rid of 2, put my stop and entry, and go. That's if the trade goes well. The trade, it might not. You can see here, like let's say if you wanted a 20% stop loss, it would be at around $24. And you kind of look at the chart. How has it been around that level? Well, one thing I can say is that I might, given what happened on Thursday, the ideal setup would probably be if we did get a flush to $24, and then you see if it defends that, and then that could be your entry, and then you don't even need to move to 25. You just need a recovery to where it opened, and you're looking at 20-30% on your options there. So that that's kind of how I look at things, and I find these I know about X already, but this options dashboard brings it to my attention because of the way that I scroll through it based on market cap. So X jumps out here in its bearish chains. Is there a bearish scenario for X? Well, there's a weekly, so can forget that one. There is one, 25. That's in the money. I'm not seeing them, really pushing it down there. But if I go into the live flow here, maybe I could see something else. Have my filter set up at 10,000. And again, so not of the bearish activity, mostly in the money puts on Friday, and not a lot of attempts to bring this down below $24. If I go to the bid side, if I see sold puts at 24, that would be good. Easier way to find that would be the intraday analyst, which will be my next topic. Okay, so yeah, very good. I had sold puts at 24. These that expired on Friday, and again, when you do this on the weekend, you got to kind of somewhat ignore those. Now, do have some bearish activity here, so there is a downside scenario, but there isn't really one that is pushing it. Like if I saw ask side puts down to 22, that would be concerning to me. It still could happen, and if the stock flushes, they might start entering those. But that would be what I would watch out for. So overall, I'm bullish on X early next week, and that thesis begins right here on the options dashboard, and then I kind of scroll through the other tools, go into some other sectors. One that I really do like is energy, and we get into the small caps on energy. VTNR, not really surprising to see them because stock just went nuts on Friday, like a lot of stuff did. So 16%. So that ran pretty hard. I might look into that one. So I see DNN, and okay, this is where another aspect of this market cap approach. DNN, I know that that's a uranium stock. I know that that's a uranium stock. And so I see those popping up here. Is there bearish activity on those? A little bit. UEC is another uranium stock. So, okay, take that into account. But then I know as I go into the mid caps, I know CCJ is a uranium stock, probably the one that's best for trading options. And lo and behold, you have kind of overwhelming bullish flow on that, where it is 5.6 million in bullish premium and 5.3 million in sold puts at 22. And this is the same trader. I've already looked into that. So single trader, massive bet, and then you have these further out of the money positions all the way up to 40. And we can look at where the chart is on CCJ. And yeah, so it had this huge run. I traded it up along this several times, and it's kind of gave it all, not all, it didn't give it all back, but it came back a lot. And so what am I looking for? Well, this is a good spot, and we'll get to see me try to draw a line here. There. Okay. So you can see back in June, it touched here as resistance, kind of turned that into support, traded around this range, broke up through, and then now it's going to mess with this line again and try to make a move up, maybe to 25. Maybe it'll try to go to 30. Some of the bets here are that it's going to get to 30 and then it's going to go to 40. That's their willing to put 600,000 K on that idea. Okay, and you can see that here. So the mid cap energy, despite the big run that oil has been on, mid cap energy on Friday was dominated by CCJ. So I go into the week with an idea that I'm bullish on uranium, and I first get that idea here on the options dashboard by looking at the different market cap sizes. And then I go into the like the live flow. What did CCJ do? I can see that it's overwhelmingly bullish here. I would spend some time going through these different chains. I might want to know what some of the multi-leg trades are. So this one was actually a bearish trade. This one, they sold a put and bought a put. So there were a couple bets that would fall back. We have some other positions here. A lot of activity on 617. So if I'm going to swing this, that then is my target. Okay, so back to market cap. The reason I wanted to talk about this is because a lot of my ideas for trades come from filtering by market cap on the various tools that Unusual Whales has, and in Hot Chains they have it as well. You can look at mid caps for everything, mid caps for particular stocks, and again you can see here CCJ just completely dominating this list. And then once you find stocks and options that you want to make sure that those chains are tradable, so that the spread on them isn't anything too crazy. And you can see here CCJ has a very favorable spread. It's why I say it's the best uranium stock for options. You capture the sector move, and you can get in and out of the contracts with market orders, or if you want to get the mid price and come out with $73 instead of $72, you could do that as well. So I hope that was helpful, and I will continue with these videos as ideas come up, and I'm gonna be working through all of these different tools. I don't know if I'm gonna get to OTCs. I had a bad experience with those that I'll talk about someday, but I'll definitely be going through the Chain Explorer, Sector Flow, Intraday Analyst, and talk about how you can use this site to make watch lists, and just basically share what I do and how I use the site. So I hope you enjoyed the video. Thanks for watching, and I will see you in the next one. Take care.